Good morning, everyone. How you guys doing today? Hey, Jen. I'm still waking up a little bit. Oh, you know what? I need to get a drink. Hmm. No, let's start on that in a minute. I'm doing good. Yeah, it was a long weekend. Today is the 12th. So next week we got, let's see, we got OPEX and SLD coming up. Pickle Gang in the house. What's up, man? So let's see. I don't want to keep this running too long today. I know Dork can't make it. I'm not even sure JFresh can yet, but we'll see. How did you turn the little reaction heart off? Happy Mother's Day. Is today Mother's Day? Oh shit. Oh, that's awkward. Hmm. What, Jen? It's a silly holiday designed by Hallmark. There's still time. Yeah, there is. In different time zones too, so I can. All right. Well, thanks for informing me. Good morning, Aradia. All right, so this is what we'll try to do real quick. See if we can make a schedule for this and push through it because with that information, I'm sure everyone has plans. So, um, let's do memes real quick. This shouldn't take long. Uh, I guess we can cover Mag 7, but I feel like this is gonna be a rough week for that, just because it's gonna track indexes so much because of all the data. And then we'll do like macro SPX when JFresh hops on. Please tell me I won't regret selling my GME for $120 profit. You might be the second person in this Discord to make money on GameStop. I'm not sure that's entirely true, but if you sold your GameStop at a profit, it might be. You can join me in the elite. Please tell me. Whoa! I made money one time, and then it's cumulative. Cumulative total earnings from GameStop profitable. You, you can we've all had green options on GameStop. That doesn't count. Nice try, Chris. Well then, that's what I thought. It's okay. We won't dive into it. I don't want to cause any undue distress. I guess we can start with GameStop. Um, got here the 4 hour. So we're kind of reaching peak liquidity on this. Last Friday morning I noted that we'd probably have a top somewhere around 2018. We topped out at $20.20 for the day. I was off by 2 cents. I know, piece of shit, but it was pretty close, and this should be beginning to resolve. Now, what's kind of interesting about this is the largest surge in liquidity that we've seen on GameStop since 2023, 2022. Yeah, 2022, since March of 2022. And there's some similarities between the current positioning and what we saw in March of 2022 in regards to the post Freg's Day period, right, where we saw like a substantial amount of shorting through what would have normally been a covering cycle. We got that kind of one blow off top, right, in January, where we ran super hard overnight, and then we didn't get any covering again until March OPEX. There's some similarities between that period and this period in regards to the quarter 4 earnings. Uh, I think it was pretty obvious that they were prepping to cover before those earnings. You can see the big spike in liquidity as we went into them, and then those earnings missed. Right? Sorry, back here. So a lot of covering into earnings they missed, and they shorted the fuck out of it. This was compounded with shorts that had already been engaged since December's run. And so both of those short positions in tandem are getting covered out here, right, in our current period. Now, during this period, XRT did not go on Reg Show, and that probably has largely to do with like dispersion across the market. XRT is, net long right now. Consumer discretionary has been doing very well, and so we have a lot of long input into the ETF, which is, makes it very hard to use that specific ETF to short heavily. But there's still, IJH, IJR. There's a whole other, massive basket of ETFs that they can access in order to keep GME's price down when they need to, and to find additional liquidity when they need to. And so, the since they didn't hit XRT as hard, right, they probably hit every other ETF they could get their grubby little hands on. And honestly, I probably should have seen some evidence of this run coming, but it looked very small and inconsequential up until Thursday, May 2nd, at which point sold puts began to expand very rapidly on GameStop. And by Thursday, end of day Thursday, sold puts had increased to a level higher than they had been at since 2021. So definitely institutional influence there on driving this run, and not a lot of warning. Generally we see those short puts increase over time, until they kind of reach a point at which GameStop breaks out. This time, all of them sold very, very quickly in a very brief period of time. They are beginning to fall off now, but they haven't fallen off in totality. And so some of that positioning remains. And as those short puts are closed out, we're going to continue to get spikes in the price. And, we might drop lower every time, but it's going to create some volatility, at least realized volatility in the underlying, for some time, until they've all bled off. And now a lot of those short puts will be expiring this last Friday and next week. I think about 50 some odd percent of the OI on the chain. And so as we see those bleed off, and short vol takes advantage of the spikes in volatility created by pulling those positions back, and selling calls, we will see the call interest, the short call interest, pick up as it usually does and drive down price and vol over time. It's going to be a slow bleed as long as indexes are trending. And there's one other advantage to this. As we approach June, we're approaching the rebalancing period. And this may explain why so much institutional interest went into short vol or short put interest on GameStop. If GameStop's market cap was under the requirement for the Russell 1K in June during the rebalancing period, GameStop could be moved back to the Russell 2000, which, as we know, is not a desirable place to have GameStop. And so there's no small amount of this that is probably due to that rebalancing period. Keeping GameStop in the mid cap index where there's less active fund pressure is advantageous for short vol positions on the stock, and probably more than worth their while to keep it in the mid caps. If it moved back to Russell 2K, there would be a significant increase in options demand. Volatility would go up substantially. I mean, I'm sure you all remember 2021. There was and GME was in Russell up until June of that year, and they definitely don't want that, right? It makes the position very hard to control. So, ensuring that GME stays within the market cap requirements of the Russell 1000 is probably of paramount importance in order to continue shorting vol on it. Market crash Monday? I don't think so. That wouldn't make a lot of sense. So that's it for GameStop. I think I don't really have anything else to weigh on that. T+2 has some potential. So either tomorrow or Tuesday, it may have one additional move up towards like 2055, which is kind of where that hard cap is, or hard cap move to from Friday's price action. Once MMs are able to get GameStop back below Gamma Max, which is around the 1550 level, we'll start to see them dump off that additional Vana hedging, and we'll probably see the price of the stock fall more rapidly after that point. So a little bit of potential over the next couple of days, and then it should start to bleed off into OPEX, where much of the OI that's supporting this run will fizzle out. That delta will fall off the following week, and it can start to be leveraged down by short vol on the call side. So that's about it for GME, and that's probably the one I'm going to go most in depth on because I know the most people have the most questions about it. Upstart managed to fall back kind of the neutral point, but still below. Fall back to the $25 support, still below Gamma Max. If this stays above 25 through tomorrow, it does have potential for a T+2 run. It could even run possibly tomorrow, depending on index and active fund pressure. I still think this is kind of in a covering period. Breaking the $28 mark could see a test as high as 32. I know Friday was really bad for it, but we didn't revert to mean, right? There's still a substantial number of calls between $23 and $25 that went in the money, and there were additional calls to the upside. And so I think this still has a little potential to break out higher. It definitely hasn't seen all of the covering it's probably going to see during this period. It's been quite a while since it's had any kind of major covering events. And so that does also have a little bit more potential. I would look to a break of 27 to confirm. But I don't think the 25 entry is necessarily bad. I would just be very cautious of any loss of the support at 25. And then, Gamma Max at 28, 15% above Gamma Max, maybe roughly around $32. Fubo, kind of still finding a ton of support in the $1.30 range. I mean, their earnings have been consistently better. The stock is a little bit liquid right now. We may see some shorting Although we may see something more similar to this period that in like early March to early April, where we didn't really see a lot of shorting. We just saw a lot of a lot of netting done in order to keep the price just kind of flat. And this is partially a product of there being a substantial number of buyers in the current price range. I don't think Fubo has any lack of buyers under $1.50. It seems to have very strong support here, and we are seeing a little bit of accumulation, right? Like we saw some back here. It was pretty short lived. This seems to be playing out longer, but very stable, consistent accumulation in the underlying. Um, I think that's a good sign. I mean, obviously, everyone's waiting to see if they meet their goal and hit positive EBIT, and they're waiting on the unknown factors surrounding the current lawsuit against Disney and Fox's joint venture. But I mean, even if that joint venture goes through, Fubo doesn't really find itself in a much different position than it's already been in, and that's a position in which it's been succeeding. So, I think the only outcome that's negative, I don't think there is actually a negative outcome from the joint venture lawsuit, right? I think, I mean, it may be viewed negatively, but if they lose that lawsuit, nothing comes of it. Nothing really changes besides they paid out some legal fees, right? I mean, and they're already succeeding in the environment that they're attempting to loosen. So they can just continue to do that, right? They can just continue to succeed at what they're doing right now with the unfair pricing practices and continue to grow their user base. Or maybe they'll do something intelligent like shift their focus to the Latino market where they can command a much larger chunk of the market share. Top, I don't care about. Beyond, everyone knows was shorted down pretty hard after earnings. Still remains on Reg Show, and we are not seeing enough covering yet to drive a rally. There are a substantial number of sold calls at $7.50, $8, and $8.50, all of which have the potential to be squeezed off as we see more and more short put selling down here post earnings. Currently, the yield on an at the money put 30 days, 42 days out, let's say 33 days out, is 13.5%. So there's definitely there's definitely a lot of interest in selling puts on this. The more puts that are sold, the closer those neutrals are going to drag to spot, and the faster the market maker gets into a position where we start to see their hedge pressured and their hedge needs to flip. Um, this is just an effective skew, and then the fact that it's on Reg Show, forced covering starts Wednesday, can only just add fuel to that potential fire. So I think this looks good. I'm very glad that I found support where it's in and didn't drop any further. I think there's a decent number of sold puts accumulating to the downside, and that can drive positive pressure next week into that forced covering period. So I think this still looks good. I have June calls. Obviously, if I don't see any run by this coming Friday, I'll assume that things are just being netted out and start to pair positioning and pull it back. But right now, I'm pretty happy with where it's at. I added to some of that positioning post earnings and took profits pre earnings. Hopefully, I get an opportunity to take profits again on that. Go EV. So we've talked about this a lot. It's kind of stagnating here. We are getting some short put interest coming in. That is pulling down on the neutrals. Very similar situation to what we're seeing on Beyond. Maybe not as aggressive. I don't think it carries the same amount of interest that Beyond does. Um, but I think sold puts have increased. Yeah, just a little bit over the last couple of days, and we're seeing a large increase in call delta. Call delta has moved from like negative zero point 0.1, yeah, up almost 500% from where it was on April 22nd, which is pretty impressive. But sold puts haven't caught up with that yet. And seeing a large influx of those sold puts come in is going to be very telling for when we have the potential to move. Currently, the this one's even more ridiculous, but it has fewer strikes. The 40-day at the money put is yielding 26%. So the advantage to selling puts here, while far greater than Beyond, is not yet being taken advantage of as heavily. I don't think there's as much interest in this stock, obviously. Beyond has much larger short vol positions on it. This isn't really necessarily short vol. I think it's just a large short position that exists. However, 26% yields on at the money puts are definitely going to draw some interest, and hopefully we start to see that put delta on the sold side follow up the call delta that's been coming in since the drop. And it is. I mean, Vega exposure has increased a little bit, and Gamma's starting to turn positive a little. Um, the neutrals are definitely falling back below spot. I think Delta neutral is at like $1.80, so we're getting enough interest, at least in these low range strikes, to support a market maker neutral position, which is rare, especially given the fact that there's only like 6 strikes within a reasonable distance from spot where there's interest. Outside of that, there's not a ton. I think Gamma Max is still up around like $8 or something, so that gives you an idea of how skewed the whole chain is. What's Foo bottom? Around $1? Probably, yeah. I mean, I could see it slipping to $1, although people seem more than willing to buy it at $1.20, $1.30, $1.40. So maybe not. Maybe the buy pressure can hold it up and prevent us from seeing another slide down 20 cents or 20% from our current price. I've been too busy following GoV closely. Worth a buy-in to follow GoV closely? Is it worth a buy-in at this point? I find it pretty attractive. I still have some short-dated calls, which I don't have a lot of confidence in. I figure, fuck it, I'll just hold them through earnings. Like, it's not that much money to lose, right? But I have been adding leaps. I've been adding leaps at $4 and $7 for 2026. The reason I chose 2026 is not in fact the that I think it's going to take until 2026 to run, but because the cost to carry them is very, very low. So I can sit in those for quite some time with really no change in the underlying, maybe about 6 months with only like a 20-30% drawdown. If this is anything like Upstart, which it does resemble, except the company itself is not nearly as good. Um, and we see multiple periods of Reg Show inclusion before we see any news or catalyst strong enough to push the shorts out. Then it may take some time. Like it may take. I mean, Upstart took definitively 6 months from the time we identified this short behavior on it till the time it ran. I have to take this phone call. I need like 2 minutes. Thank you guys. Sorry. Sorry about that, guys. Anyway, where were we? So yeah, go EV. Yeah, it may take some time for us to see any action here, but I think when the time does come, I think enough shorts got buried in the reverse split, given how quickly it went on to Reg Show following that period, that they weren't all able to get out. And so I think at some point there will have to be some kind of covering event here. In the meantime, 40 DTE CSPs yield 26%, which is impressive. I mean, that's at the money, even a little bit, out of the money. You're still looking at like, I think like a 12% yield on the $2 put, which is at 40 DTE, which is impressive. It's quite a lot of premium. The skew there is notable. You said you bought Leaps. Can I ask what was the cost for Leaps? Mostly around, I think, like $1. I did get some slippage on my initial order, and I think they might have hit like $1.20 ish at one point. Um, but I've just been slowly picking them up. I don't have a ton of them. Maybe like I might have like 15, 20 at the $7 strike. And then at the $4 strike, let me look. Looks like my cost basis on those is around $1.35. And I have 10. So not a ton. I'm just kind of DCing them as time goes on. I'm not going crazy with them or anything. I do have a lot of CSPs out now. That's the majority of my exposure, I think, both at 250 and $2. Um, I have some $3 calls for June that I rolled out from my May 17 position. That's mostly just for earnings in case there's a surprise or something. And then I've been selling the June 2 and 250 put, and also the August $2 put. The August $2 put has roughly, I think it's about a 25% yield for 96 DTE. Yeah. That's six price action. And then, I'll take the credit from that eventually, and flip those into synth longs, right? But I'm just picking up the credit right now. Building the pickle jar gamma ramp. Not excessively, but yeah, I mean, I have some interest in it. There's no lie. Um, BNAD BNAD ran up a little bit this week. This is kind of interesting. I believe that their proposal is going to be voted on and decided by the end of this month. There may be some purchasing going on here, and you can see that pretty easily reflected in the volume profile as people jockey to position and get in and take advantage of their ability to subscribe to shares at 5 cents a share. So, you have to be a shareholder um, to subscribe to the offer, and then the amount you're able to buy is ratioed out to your current shareholding, right? And so we may see some buyers, and we may also just see some shorts close out because they came in hard here for no real reason. I mean, there was no share offering, right? And now price is starting to rise. We don't really know how many of those puts are going to be trapped, at 20 cents, but it's a number of them, you know. We did get some shorting during that period, mostly through ETFs, but a little bit in the underlying as well. Um, and so some of those shorts may want to cover as buyers come in and pick up shares in order to give themselves exposure to the offering. I think that's it for the memes. I'm not going to talk about SPX yet, Bob, but I'll get there. Whoa, I did not know that. Yum. Yeah. I'm gonna be all over CSPs on that tomorrow. I love me some CSPs. They're pretty fun. And at 25% yield, they're very fun. Do you think Sony is a value trap? I've heard they're dipping their toes into making semiconductors. I haven't heard that, but didn't they just recently have an acquisition? Or they're trying to acquire Warner? I think, well, there might just be, oh no, Paramount. Yeah, there's some news. They want to buy out Paramount for 26 billion, which would be huge. I don't know anything about yeah, I don't actually know anything about making semiconductors. Don't they already manufacture some? Sony Device Thailand announced that starting in Feb 2024, it's begun operations with several production lines at the new fab built on premises of Sony Device Technology Thailand. Ceremonies witnessed by other VIPs. SDT serves as a production center for the assembly of the main product line within Sony's imaging and sensing solutions business. The new fab, dubbed Building 4, will be utilized for the assembly of image sensors for automotive applications and display devices, as well as mass production of laser diodes for a data center application. So, looks like it's not so much a rumor as it is a 137,000 square meter facility with an 8,800 meter squared clean room. They may lean harder into that. I mean, everyone's going to want to slice of Nvidia's pie, right? That's we're going to see a lot of that over the next couple of years. No one's going to let them have all the fucking money. I mean, Intel's like the prime beneficiary of the semiconductors at like the CHIPS Acts, right? Intel sucks, but I mean, they're getting a lot of money, so we'll see what they could do with it. All right, on to the Mag 7 because I want to get those covered real quick. We'll start with Apple. Apple kind of faltered a little bit on Friday, and it was actually set up really well. It had a decent amount of call interest. Um, Hold on. Ninth. I don't have the updated data there. Yeah, I'm still not entirely sure how that went. Give me 1 second. Let me look at something else because I want to see what happened with Apple on Friday. Hmm. See, Delta Gamma Max retreated. A bunch of the local calls fell off, and it looked like yeah, it looks like Gamma and Delta both fell off pretty hard. IV dropped a bit. So we might have just seen like a lot of selling of calls in the early part of the day at the 185 strike. Um, it's kind of what it's looking like to me here. And so where does that put us for this week? Well, we still have supportive positioning at 180. Um, 1 second, let me update this and make sure that's right too. Oh, you piece of shit. Hold on. There we go. Takes forever to load. Yeah, so still a decent amount of support at 180, and then a definite bump in sold calls at 185. A break of 185 still has a range of about 190. Um, Pretty neutral here, I think. Well supported at 80, resistance at 85. Um, the failure to break out higher above the 87 50 strike is probably pretty bearish. We did fail the trend here on the 1 hour a little bit. I don't know where you'd exactly confirm. I guess you just confirm the breakdown there at 182. If more calls come in at the 180, like more sold calls coming at 180, we could see this fall further. I still have some open bull puts out on OPEX expiry at 180, 175. I'm not too worried about those right now. I'll probably close them up tomorrow. Um, and I was already out of most of the bullish like interweek Apple positioning. Um, on those sold calls. I think it was like Wednesday. It was in Pickles Picks or something like that. And those were just weeklies, but I took profits on most of those on Thursday. The ones I didn't obviously got burned, but it was fine. There wasn't much left. Uh, Definitely, yeah, but definitely some downward pressure, a little bit of IV crush, a loss of 82.50 could confirm a retest of 180. This might be a little bit better setup for short calls, but with CPI and PPI this week, it's probably not worth the risk to try to pile in with the rest of the sold calls at 85 because they could get just as easily blown out if PPI or CPI are cool. So probably best to stay away from this, or maybe there's like an iron condor opportunity, but it's probably not worth the pennies. AMD still struggling to recover. Let me see here. I think Friday's close saw it slip just back below gamma neutral. Maybe not. No. Gamma neutral 150, 149. So just about to test GN here. It's about $2 off, and I think it declined a bit more in after hours. But yeah, so it's about $1.50 off from a retest at GN. If it fails that, I think there's a pretty clear path to the downside at like 145. So fail of 150, 149, right around here, is where I would kind of look. And then if it fails that, pretty easy move down to the 145 level, which would be about right around here. So this range is pretty bearish if it falls into it. Yeah, right there. It could bounce off of gamma neutral. Obviously, CPI, PPI, again, are going to be a big influence here. If it does, I would maybe not play the upside unless it got a break of 155. So this is where I would confirm a reversal and a breakout from this consolidation at 155. If it breaks 155, it's got some pretty good range to the upside. 160, 250, 165, around there. So yeah, that's kind of what AMD looks like. A little bit in the middle of both potential moves. Amazon, let's check that out. Amazon. Hmm. 187. It's just, there's a lot of call interest building at 190. I'm pretty sure those are short calls. Let me take a look at something here. Yeah, IV's starting to crush out a little bit. Gamma max is around 196. And this looks like we've got a pretty solid rejection before that. There's support at 85 here. But with the falling implied volatility, and the just huge amount of calls sold at 190, this may continue to drop into CPI, PPI, and then you'd be looking here for a continuation or a reversal, right? If it reverses, that could be very bullish. If it drops, it's got some range to the downside. I'm not gonna say it doesn't. Gamma's really flat, but I don't see any reason it couldn't continue down to 180, maybe further. That would require a bigger fail, and the market maker is kind of supportive here. Yeah, I mean, there might be an opportunity to straddle a 185 test. I think that's the only reasonable approach, and that's probably not worth playing, to be honest. If it broke 180, that's really bearish. That might really turn things around. And there's not a ton of room to the upside. I mean, resistance is there at like 196. I guess you could confirm that on a break of 190. And you could confirm the 180 test on a break of 185. So maybe there's like a strangle there, or you could, you could set up like a skip strike butterfly on either side. That's like profitable at, 82, 50, 190, 250. Like peak profitability, right? But yeah, that's probably not great. If you wanted to go long, short, that would be an option. But yeah, actually, that probably wouldn't be too bad either. Give yourself some theta to deal with near-term chop. It does look like total delta on the chain is kind of stable, but the gamma's declining pretty quickly, so less near-term positioning. I don't think anything else is really falling off. Yeah, maybe just not worth. Might not be worth even the long-term short. There's just better confirmation levels. So Amazon sucks. Google got a nice bounce into the end of the week after failing its bear flag there. On the news that ChatGPT is not going to be including a search engine in their next version. I don't really. I think this one's kind of also in between bullish and bearish breakouts, but I'll double check it real quick. Gamma Max is at 176. Gamma fell off. About $500 million, and Delta fell off on Friday. Positive Charm fell off too. IV dropped on the weekly, increased on the through time. Bullish still falling off. Still more puts being sold. Yeah, this might also just kind of be choppy right here. I don't see a great range for it to break out to. There's a ton of sold calls at 180. There's a bunch of sold calls at 175, but there's support at 70 and 65. I guess if it loses 65, it could start to fail, but I don't think it'll fail much. And it looks like it's going to be kind of hard for it to climb also. So yeah, this one looks pretty boring as well, and probably any bigger move dependent also on CPI, PPI. A lot of these are going to be like that just because the period we're going into and everybody's trying to hedge their risk against the inflation prints. Meta 175 rejection. Oh, sorry. All right, let's check out Meta. Gamma Max at 502, so we're nowhere near that. Market makers pretty supportive. 2 billion in Delta fell off on Friday. About 200 million in Gamma. Short puts aren't really going anywhere. There's a bit of vol crush on Friday as well, so we might be seeing puts stacking up at or short calls stacking up at the 75 strike. Not really. 80? Yeah, maybe 80, 75. We're starting to see some short calls come in. Actually, if Meta fails 75, it could drop back to 465 pretty quickly. Like a 1-day move. A breakout of 75 and 80, maybe you could see a test at 90. Yeah, so breakout of 80, test at 90. A failure of spot could fall back to 465 before it finds support. So not a lot of range in either direction, but there is some IV crush where it's trading at spot right now. And that could be selling of the 80 and 75 strike. If it is, that might give bears a little bit of an edge here. There might be like a weekly debit spread opportunity at the 65. If it breaks 77.50, that would probably be risk. So yeah, I would say that there's a little bit of a short opportunity here at the top. As long as it doesn't break the prior high, like it might pull back to the 65 level down here, before getting any kind of continuation. That should be pretty much in line with what we expect from the trend. Might even fall a little further than 460. Um, and then if it were to break 75, it's not that it would go up a lot more. It's just that's probably where you would want to define risk, because above 75, the pressure from the short calls is going to be pushing in the other direction. So again, kind of boring, but there is some opportunity there. Microsoft, not influenced by its options chain very much. I generally don't like to look at this one, but everyone's kind of hyped because they're talking about spending a lot of money on data centers right now. So we'll see if that's had any effects on options. This looks quite bullish. Lots of nearer dated calls up to like 425, 435. I don't know if those are sold. IV30 has been pretty steadily declining, so they might be. But if it were to break out, it would move really hard. This might be a really good play if CPI or PPI are cool, because it could squeeze out all those short calls. Gamma Max is at about 435 as well. Um, Gamma Neutral is at 385, which it's nowhere near. I don't see a lot of Delta falling off. Gamma has been falling off, so there's a bit fewer shorter dated calls, but there's plenty of puts, sold puts. Yeah, a little bit of positive charm. Yeah, so this might be something, just because it's so stacked on the short call side, which a lot of the other ones aren't. The other ones we've gone over kind of have like one big short call wall. This one has several. If CPI or PPI are cool, this could definitely squeeze out those short calls, and move up to like the 440 or 435 range pretty easily. On the downside, should CPI PPI not be very good, we need to slip 410, and a slip at 410 could see a test of 400. But well supported and probably grindy. So we need, this is the bear side down here at 410. Maybe that would see a test of 400, but that would probably take a long time because it is well supported, and it's well supported by the as well. Under 385 is where things would start to get really bearish, and it's pretty far from that. So probably not worth a short, but it might be worth a call if inflation is not as hot as expected. And then what do we got left? Netflix. Netflix bounced really hard. Kind of found a top at 625 again. Yeah, this one's probably worth looking at just because of the rejection. I noted last week that this looked pretty good to go long on. If it got the bounce off of the trend, which it did, and a break of 575, that ended up being about a $20 move. I got out of it at like 600, but I guess I could have stayed in for the rest of the week and squeezed out a little bit more money. There's plenty of call interest up to 625 where it starts to fall off a bit, but it's still strong all the way up to 650. To the downside of spots, there's pretty good support at 600 and 590. I think it'll probably take a lot to turn this around. It could pretty easily find support up here and start to consolidate into a more bullish breakout, up to the like 650 strike, which is probably about where Gamma Max is right now. Yeah, Gamma Max is at 640. A little bit of Delta fell off on Friday. A bunch of Charm fell off into the end of last week. So there is profit taking on the nearer term positioning. But IV is pretty stable, not really falling much. So not a lot of short calls coming in. Looks like most of the calls coming in are long. Delta almost doubled this week on the chain. So it does look well supported. If it loses 590, that would be pretty bearish, but we're quite far from there. And it's probably more likely to find a support somewhere around 600, and then I'd probably attempt to push up. This doesn't tend to be super affected by inflation expectations. I don't think their business model is really rocked by inflation going up. It does have some index correlation, but it's not huge. And this can definitely have a bit of negative beta even, sometimes. Yeah, beta is around 1.17. So it's not exactly like super influenced by SPX or NQ100, but that's what I would look for. I'd look for support around 600, and then maybe that's an entry to pick up on a bounce. I mean, be aware of macro conditions, but it looks very strong to the upside. Um, what do we got next? Nvidia. Nvidia's been in a weird spot, and even Friday, Nvidia wasn't really very bullish looking, which I noted in the Pickles picks the night before. It's got a real problem with short calls at 890, 900, and 880. Now, it did manage to close above some of those short calls, but they are a little bit longer dated. And so they're kind of unwilling to be squeezed out. I don't think we have their earnings coming up just yet. We've got a couple weeks. May 22nd. So about 10 days. Yeah, 10 days till Nvidia earnings. So we will start to see IV increase, and that may force their short calls to pull back. Short calls at 880, 900, and then after 900 we start to get a little bit of a ramp up into 920. And then after 920, major levels are like 950, 1000. Not a lot of interest up to 1000, but 920 to 950 is starting to fill in pretty well. The bump in volatility going into earnings is probably going to pretty greatly benefit long call, like long vol positions. Gamma's increasing, delta's increasing. Not getting a ton more on the short put side, but Gamma Max is at like 956. Yeah, I can see this getting pretty bullish going into earnings, especially if the bump in volatility starts to squeeze off those short calls. And I would say the range for that is probably 920 to 950. I think it can move pretty quickly up to 920 in squeezing out those calls, and then as those calls squeeze out, I could push it as high as 950. Past 950, it'll depend on positioning that comes in after it starts moving. Like the 975 range doesn't look phenomenal. There's some interest there, but not a ton. And then Tesla. Bulls got blown out here. under I don't know if they're under indictment, but they're being investigated by the SEC and was it the DOJ that's investigating wire fraud regarding self-driving cars. I'm not sure. I need to look into that more. I haven't been paying very much attention to that, but this has got a shitload of puts on the chain. It looks quite bearish. I don't think that we've lost. Or maybe we actually have. Hold on. There might not be any more downside support. Delta neutral. Okay, so we haven't lost delta neutral yet. That's at 167.27. Gamma is already negative. There is almost, after Friday's expiration, there is only 890,000 like positive delta left on the chain. Very, very little. Calls have been falling off. There's not a lot of put sellers coming in. A few, but not many. A loss of 167 at delta neutral, I think, could pretty easily see a test of 60 to 50. The put interest on the chain currently supports that move. So, this one I kind of like the short. Looks like it went right down to delta neutral and after hours trading anyway. Maybe if you want another layer of confirmation, you could wait till like the technical support at like 166.48, confirm it's broken below that, and then go short. But it looks like it's gonna keep falling, and the range is about 150. So and obviously that could pick up momentum as well. But yeah, a failure here, pretty bad. I don't know. I don't even know where I'd look for a bounce. I don't think the upside looks very good at all, personally. Maybe if it got back over like 180, but this looks like shit. Like really bad. Yeah, I'd have to get back over like 180 for it to show any signs of pulling back to the upside. You might want some theta on it. The puts are kind of spread out, and there hasn't been a lot of short-dated interest, but seems like a move to 150 would be pretty simple. And that should be it for the Mag 7. What's up, sexy pants? Hold on one second. I gotta. There we go. That should fix your volume.
Can you hear me now?
Yeah, I can hear you.
All right. Yeah, I'm just about to change a poopy diaper, so
Nice.
you guys get to enjoy that.
Do you want me to give you a minute?
No, absolutely not.
Oh, okay.
How's it going?
It's going pretty good.
Dude, I've been changing diapers for 11 years now. I'm a seasoned pro. I trained all my boys to say, every time I took off their diaper, to say, "Oopsies, I pooped on my balls." And it's hilarious for like a toddler to say that.
So many children.
Yeah.
You know
It's
what?
fun, right?
I'm glad that your genes are going to be persisting.
I am too. I think that's one of the weird quirks of humanity is that we want to live on through our offspring.
That's our like biological directive, supposedly, right? For any organism.
Yeah, it's just weird that it's ingrained into our emotional state.
Yeah, that is odd. You'd think we'd be able to think our way around it, but no.
Well, yeah. Anyway,
supposedly, yeah. So I went over the Mag 7. There's a couple that were interesting, but they look mostly boring as fuck. Like Apple, AMD, Amazon, Google, Meta are all just sitting under call walls. that they haven't been able to break. And then Netflix looks bullish, but it's not part of the Mag 7. Um,
Yeah, it's too small.
Tesla looks super bearish. Because
Well, yeah, Tesla's a pile of garbage right now.
yeah,
I
and then
mean, it's
Nvidia looks like it's just gonna squeeze all the short calls into earnings.
yeah, that's probably true.
Because IV30 is still at like 60 right now. And I think last earnings it went up to like 100 and something. And as soon as that IV spikes, all those short calls are going to close off, and then it's just going to run into Gamma Max.
Yeah, maybe. I mean, at some point, yeah, I don't know. Been thinking about how much money is left a lot lately, and at some point, there's only so much money to support so many price levels.
I've been thinking
Although
a
we
lot
can get
about
that.
how little leverage is left.
Oh, look at this. Yeah. Well, yeah, it'll be interesting to see what happens next. It's gotten so boring, right? Because like everybody's already fully levered, and so we just like very slowly drift up ever so slightly every day.
How much do you feel that the haircuts are responsible for the stagnant price action? Like we did get haircuts the week before last, middle of the week, right?
Yeah, we got haircuts and then things started going down.
Yeah.
Um, I think, I think it has something to do with it, but I think it has largely recovered at this point. So it's it's kind of like to me it's not really an issue anymore.
Hmm.
But that's just me.
I'm just wondering because there was some trimming back in there was some trimming back in the I think triple B, triple A, or double A, triple B. Bitcoin got trimmed hard, right, with the BTC ETFs no longer being usable as leverage. And I think we've seen a little bit of that reflected in drops in BTC pricing, although it did recover a little bit this week. And then, yeah, we look at broader tightening in financial conditions. We're starting to see the dollar go back up. The 10-year moved back above 4.5 into the end of the week. I think if China doesn't cut rates tonight, the dollar might still stagnate. But if China lowers the rate on their short-term facility tonight, then we'll probably see the dollar spike on the yuan, and that'll tighten up conditions even more going into CPI PPI that are at the beginning of this week.
Yeah, I mean the thing is though, is that sorry, I'm trying to put together something for my kid. It's Mother's Day and all, so
Yeah.
I
Yep,
can't.
yep, yep.
But so the thing is though with like the haircuts is like how many people besides retail was really like levering up Bitcoin holdings, right? I don't know the answer to that.
Asset managers big. There is
Which is
yeah.
just makes me just
Well, because they
angry
could
thinking about
finally
it.
they finally had access to a product where they could get Bitcoin leverage, right? Especially on the mutual fund side, where they can't own Bitcoin itself. I mean, the hedge funds don't give a shit, right? They'll just sell their BTC ETF and buy Bitcoin, like physical Bitcoin, right? But the mutual funds that were plowing money into Bitcoin, they're not gonna like that. They're not gonna like that haircut at all.
Oh yeah, I'm sure. To the extent that hopefully there weren't that many mutual funds, but you never know.
Well, I think we've seen those mutual funds move over to gold quite a bit over the last week. Gold almost back at 2,400 again. Um, just climbing right back up from support at 23. And that makes sense, right? If they're holding Bitcoin, or whatever Bitcoin they're holding as an inflationary hedge in mutual funds, they flip that money over to gold. I mean, it's maybe not as volatile of a hedge, but it keeps them hedged against that inflation slash currency or inflation expectation slash currency risk.
Yeah, I so I need to run some numbers, but I'm just really so the thing that I've been thinking about a lot lately is I looked at the Fed's Z tables and looked at um, like where all the household assets are, right? So like, who owns what and how has that changed over time? And the reason that I like to look at it as a relative value in any given year is because if you look at like what fraction of a household's assets are cash or bonds versus treasuries or sorry, cash or bonds versus like stocks or real estate, that can give you like an inflation adjusted look at how levered people are into various things.
Yeah.
And I mean, we're basically back up to leverage seen in like the great financial crisis or the global financial crisis and the dot-com bubble, right? So like
As
in the
far as
dot-com
equity holding by retail.
as far as equity and real estate versus cash, right? And
Yeah, okay.
this was me looking into, everybody's talking about the melt up that's going to happen, right? Everyone's like, oh, we're going to like 7,000 whatever.
Mm-hmm.
I mean, it's just a contest to see who can like say the most ridiculous number. But
Yeah.
so I was like, all right, where is all the money? Like, this idea of like money on the sidelines is silly, right? Because for every buyer, there's a seller, right? So there's always cash sitting somewhere, right? And so I was like, okay, well, if people really are overweight cash in money market funds, then that should be reflected in a lower relative weighting of equities in real estate, right? There
Yeah.
should be a larger weighting of cash. And of course, the opposite's true. we
Yeah, I
have,
mean, I feel like most of the money in money market funds is institutional because like I know some people are in money
yes,
market funds, but like and obviously that's biased, but very very few. I would say mostly MMFs are being used by institutions in lieu of overnight facilities that pay a lower rate.
yes. So I would agree. Most of it is corporations that are holding these.
Yeah.
But I mean, in terms of like a corporation, corporations aren't really going to take their mountain of cash and then like lever it into high risk instruments, right? I mean,
No.
they'll do that a little bit, but they're not gonna. I mean, if you're Nvidia, right, you give a little bit of cash to every high risk startup that might want to buy your chips, but I mean, most people are just trying to. They have a fiduciary duty to like maintain the pile of cash as cash, right? So they're not.
Yeah.
I mean, they're initiating lots of buybacks, and that goes into stocks, right? So that will elevate retail's relative holdings of equities if they
Mm-hmm.
don't sell or rebalance, which is I think a lot of what's occurred as well over the last 2 years. But I mean, those buybacks are not enough to account for everything that's occurring now, and I think by and large, I mean, what we're seeing is that in the dot-com bubble, everyone is like super overweight equities. In the housing bubble, everybody was super overweight housing. Now we're like half overweight equities and housing together. But if you combine those two, they equal a levered household equal to those two other periods, which are the only, the data goes back to, I think, the 50s that I could find. And these are the three highest points, right, by
Mm-hmm.
far. So, I mean,
I could
this is
have
what I
I
was
could have
saying.
saved you a ton of trouble and let you know that B of A releases a report every week on like retail leverage across their clients, like equity, home equity, and fixed income assets. And it's usually pretty telling for the majority of retail because their customer base is so huge. But yeah, according to them, retail's been standing. Everybody is on the rug, and they have been for like 3 months.
Oh yeah,
Yeah.
hardcore. Um, and yeah, so this whole idea of where's all this money going to come from? To say, for example, taking us back to what we were originally talking about, to say to pump Nvidia into earnings. I
Okay.
mean, this is. I mean, we're talking about additional leverage, right? I don't know. I mean, I'm going to think out loud a little bit here. I mean, the market maker is, of course, going to price up the options because they don't want to get rugged. But
Yeah,
that's just going to
that's
make,
that's just my thesis. Like the MM will price it up, and that'll push the calls off as they get priced out, right?
yeah,
I
so
didn't
it
really
could,
think people were gonna lever up on it very hard because if they were gonna do that, they would have done it already, right?
yeah, true. When is Nvidia earnings? Is it in like 2 weeks?
10 days.
Okay, yeah.
Yeah. But IV's still low. I mean, largely because of all the sold calls, right? IV should already be like probably much higher than it is. I think. Hold on, I just had it pulled up, but I'll pull it up again. So, so IV 30 is at 57.57 right now, which is really low considering earnings is in 10 days, right? But
What's IV 10?
IV 10's at 52.25, IV 60 is at 50.84, but HV10 is at 41, HV 30 is at 53.
Oh,
Yeah, which is strange. And if you like last week, IV 30 was much higher. So IV 30's just gotten crushed for since like April 25th. IV 30's just been declining.
yeah, but
Um,
isn't that how much of that is sold puts though?
that's a good
Because
question. I don't think like Vega exposure has increased a lot relative to the decline in IV in the IV 30. So I don't think we're seeing a lot of put selling, which does make me question how bullish it really is.
well, how come? Okay, so if we haven't seen much put selling, why has this just been rocketing upwards with everything else?
I think it's just well supported with all the delta, right? I mean, there's still like fucking the MM's got what 5.2 billion delta on the chain.
Okay,
No, well,
yeah. So
yeah, I mean,
I mean, it could have just been a responsive gamble, right? Because well, everybody is already short both sides, and so it dropped, and then the market maker just had to buy, and it pushed it right back up.
yeah.
I could see that. The question is though, are there more sold calls or more sold puts? That I'd have to dig into.
I think there's far more sold calls right now. At least if we look at OI, I mean, we could look at call skew, which is like 6.2. Um, Let me see something. Hold on, I'm just trying to load up this data because I was looking at Tesla last. Nvidia's chain takes forever to pull. um,
Yeah, I'm trying to fix that. Anyway, I mean, while you're pulling that, yeah, I mean, from an index perspective, things could not be more boring right now, right? Everybody's just short strangling zero DTEs, and the market moves up a little bit, and then the next morning, people sell off some of the calls they had, and then they just strangle it into the end of the day.
yeah, which has been annoying.
And so we're definitely seeing more volatility creep up into, big names like the Mag 7 because it's strangled so hard and it's held in such a fixed spot. If one meme goes up, another meme has to go down, and so there's always just like the three of them up and four of them down, like every day, and they're all swinging wildly because different days, different ones pop up and different ones pop down because everyone's just squeezing all this vol. But yeah, it's really hard to say because of that effect, because it it really just depends on, it's really a volatility effect every day with like the meme stocks, that it's hard to say like whether it's going to rocket up or rocket down, but I guess it's probably a pretty good assumption that it's going to do one or the other.
Yeah, I sent you. So I just sent you the gross, like the gross gamma for the Nvidia chain, and you can see that like all of the puts are to the downside. There's very few puts above 900.
Wait, where is it?
I put it in the chat.
Hold on, it didn't pop up for some reason. Let me take a look. Wait for chat.
I can shoot it to your DMs too if you want.
Hold on, I'll figure it out. Maybe.
There.
I don't know. Has anybody? There we go. Has anybody else been annoyed that Discord mobile and Discord desktop are like two completely different apps at this point? They used to be very similar, and now they're very different. It's annoying.
It's very annoying. I hate using Discord mobile.
Let's see. We're looking at call gamma and put gamma.
Even weirder on the market maker expected move right now is like plus minus 8% over the next week, which is exceedingly low for the week prior to earnings. And even over the rest of the month, it's only 16.6%.
So what
And
we
volatility,
really,
volatility, like IV30 has declined steadily since April 29th.
huh.
I think,
I mean,
I think,
maybe people were just long puts and then they sold them off. I don't know.
I think that's what happened on the drop, right? Like during the correction. I think like a lot of this rally was just driven by puts taking profit.
That could be the case. Yeah, we could get another melt up. I mean, I'd have to do some more digging. I'd like to see gamma exposure on this, but which is something I could put together, but it would be a
It's been,
monumental task.
oh yeah. Um, as far as OI, so for the OPEX expiration, call OI is 457,000. So 0.7 PC ratio, and then 0.8 and 0.9 for the 2 weeks following. So it looks like the puts are a little bit further dated, but the majority of the interest going into OPEX is on the call side right now.
Yeah, so I mean, you're right. It kind of sounds like there's a bunch of sold calls, and so they could get squeezed. If there was a gun to my head and I had to pick, I'd go long Nvidia into earnings.
Yeah, that's what I'm.
I'd
That's
pro-
what I'm thinking. Into earnings and then cut it.
yeah,
Like
after
as
earnings.
IV gets priced up, you already get that advantage being long vol, and then just like get out before actual earnings.
Yeah, yeah, that would be the play. I think.
Okay. Well, at least we're in agreement on that. Do we want to talk more about how IV's just getting fucking crushed every day, or they're trying to crush realized vol every day on SPX and boring the shit out of us?
Yeah, I mean, I think sure we could talk a little bit about that. I don't think it's any more complicated than very large people sold a bunch of puts. They got rug pulled and got underwater real quick, and they wanted to get back to flat, and that's what they did,
Sort
and they
of.
won. Well, yeah,
Sort
they
of.
they levered into it,
Yeah.
but I mean, they showed that even in the face of great adversity, they can always lever back in.
I feel like a lot of this is just a mean reversion as we wait for inflation data. And then I think if inflation shows any sign of cooling, then they're really going to pump. But if it doesn't, they're just going to de-risk a ton of their short vol. And they've got us into a position where the MM's going to eat some of their bags, right? If they start to de-risk. Like we've got a little bit of padding between spot and GN, right? So as they de-risk, the MM's gonna have to hold some of their bags. But I don't think we're far enough away from gamma neutral yet to support a significant amount of de-risking.
Yeah, and again, I mean, the question becomes: is your reduction of delta smaller than the positive gamma that's on the chain, right? Because keeping in mind when you de-risk, you're pulling off both positive gamma and positive delta,
Yeah.
and so
And you're spiking IV, which is going to increase margin requirements.
yeah, so this is one of those kind of things where it's very hard to back out now that we're in.
Mm-hmm.
Which is why I mean we can still see like violent down of like 6% and then just like pushing it right back up because like nobody's gotten out really at all. I mean they've just pushed harder against this position because nobody can really get out at this point. It's so levered.
Yeah. No, I
And
agree. If we
and
look at
I,
like that thing
it
that
doesn't mean
me
like
me
they're
and
all sitting
Dorco.
around sweating. I think they're all very comfortable and they love just picking up pennies in front of a steamroller and nothing's happened yet, so nothing's ever going to happen, and they'll just keep doing it until they get screwed. But
I feel like this one's a little bit more panicky. I mean, at least like if we look at how fast they levered up in order to get everything kind of back to neutral, and they still have a lot of underwater puts at like 250, 225, right? That we haven't
yeah,
that we haven't really broken from the peak. And even at 200, like they can't de-risk those. They can hold us above 5200, which they just got us above this week. But it's not like they can pull those back. If they
yeah,
start to
I
pull
know.
those
Yeah.
back, yeah, we just go back to 5000. So it's yeah, I mean, if inflation expectations are hotter and margin requirements get tighter at this point, I think we just plummet again because I don't think they
Well,
can.
okay. So, and this is in general. Um, so a couple things will happen if. My son is telling me to shut up. I have to talk, buddy. You've already seen this movie a million times. You just remember the words. Yeah. So if I think the primary effect that's going to happen if inflation comes in hot is a repricing of future fund rates,
Yeah, yeah.
which will um, which will drive. Which let's see, future fund rates go.
Down. Well,
No, well, if
future
inflation's if
rate
inflation's
cut.
hot,
So rate cut expectations go down. Future fund rates go up. Near term treasuries will rise. Right.
yeah. I
Yeah.
mean
So you expect to
that'll
see the
put.
2 year push back up towards 2%. The 5 year would probably push back up to like 4.75, like roughly where we were
I mean,
two
so
weeks ago.
what that will do is that will give a slight advantage, a slightly larger advantage to sold calls versus sold puts, because this is kind of the game we're in, right? Everybody's just selling calls and puts, and sold puts are just slightly winning out every day,
Yeah.
which is just super boring. But if those expectations eventually will reach a tipping point where, because of put call parity and how the future rate plays into options pricing versus bond returns,
Mm-hmm.
that'll give sold calls a little bit of an advantage, and that might start pushing us down the other way. Now, of course, the sold puts can just choose to lever even harder, but I mean, at some point that has to end, right? It seems like it's kind of topping out historically right around where we are now. Um, so it'll be interesting to see, if they get another longer term hit like that. But I think there's a bigger issue. My son's just kicking me out of the room now, so I think we're good. I think there's a bigger issue. Is if you look at M2, M2 annualized over the past 5 months has been growing at about 7%.
Mm.
And I know you know where I'm going with
there's that
this.
pesky number. Yeah, I know exactly.
Yeah.
But don't let me stop you from going there.
Yeah. So, okay. There's another thing that's growing at 7%. Uh, and that's the fiscal deficit. And that's 7% of nominal GDP.
Mm. And
So you
inflation?
have a situation
I'm sorry, productivity. You
where,
forgot productivity.
okay, so yeah, productivity. The Atlanta Fed thinks that productivity is going to be 4%, which would put inflation around 3%. Uh, I don't really ascribe to a lot of that. I just think our CPI numbers are. I'll be politically correct and just say very noisy.
Mm.
I only look at nominal at this point because I mean it's at some level we know that productivity in a thriving environment in a mature economy is around 2 to 3% a year, right?
Mm-hmm.
And the reason for that is because it's so large and it's so stable that it takes time for people to grow a business, right? If something grows by a few percent, like they have to buy more space, which means somebody has to build more space. Then they have to, find suppliers and buy more equipment to expand capacity, right? I mean, there's
Yeah,
just
yeah.
this upper limit to the productive growth of any economy, and that tends to be around 2 or 3%. So, if nominal GDP is growing at 7%, inflation's 4%, right?
Yeah.
And that's kind of just how I look at it.
Well,
Um,
hold on. Now, there's something that you do need to address in that calculation. When GDP and we only have the preliminary GDP report so far, right? But when GDP stops growing at the rate, like the nominal rate of 7%, right, and GDP starts to like output starts to fall, but the fiscal spending remains the same, that's going to bleed back into inflation at an equivalent rate, right?
yeah.
So,
Oh yeah,
you
yeah,
know,
yeah, yeah. Well,
if
that's
we're
what I'm saying.
spending 7% and getting 2% growth, 5% of that's going into inflation.
Yeah, exactly. I think that's probably the best way to estimate inflation. Just do that backwards. Excuse
Yeah.
me.
So yeah, I kind of agree that our rate of inflation is at about 3%, 4% right now. But as growth slows, right, and like our spending is no longer fueling an equivalent amount of growth, that is going to push into inflation. And based on the last GDP report, that's kind of telling us that like inflation should be around like 5-6%, which is fucking frightening. Especially given that the Fed has actually done jack shit for the last 3 years.
I mean, you can look at. I mean, go back in history, right? I mean, I think it's pretty clear that inflation hasn't really been under 2%, hardly ever, right? Especially in the last 20 years or so.
Yeah.
It's just it's a hedonic adjustment, right? Things have gotten better. Like for example, TVs are better and they're cheaper than they used to be, right? You can get a 50-inch TV for what, like a 13-inch TV cost, 25 years ago.
I can't eat my
Um,
TV.
right. You can't. That's the thing. You can't eat your TV, but those things count as improvements in productivity, not ballooning of costs, right? You can't really buy a 13-inch TV anymore, right? Most maybe you can. I mean, I've seen people put some in their bathrooms and stuff, but I'm sure those don't. I'm sure those are expensive. I haven't looked it up. I feel like TV in the bathroom is probably one bridge I shouldn't cross. But anyway, yeah. I mean, I think in general, I think inflation is higher. I mean, you look at asset prices, right? I mean, they've grown so much more than what inflation would imply,
Yeah.
and that's just not possible without huge debasement that's just not being factored in. Um, but yeah, I think the easiest way to think about it is in GDP is going to grow with deficits as a deficit growth as a percent of GDP, which right now is around 7%. Um, but anyway, back to what I was saying with risk and growth and investments going forward. M2 growing at 7%, at least annualized since October when the Fed pivoted. It tells you basically that the Federal Reserve is doing nothing. And I know we've already talked about this in various ways, but I think this is the simplest way to show that the Federal Reserve is doing nothing.
Yeah.
Because the assets of banks are scaling with the deficit, right? So they're growing at 7% in GDP.
Mm-hmm.
And then they are turning around and creating additional credit at that rate, right? So essentially, they're keeping their treasury assets plus reserves to leverage constant,
Yeah.
which tells you that the banks are comfortable saying that treasuries are just as good as cash, regardless of any duration risk, which thus implies that banks are not hedging any duration risk anymore, like zero.
Yeah.
And if that's true, then the Fed has done nothing. Rates are completely irrelevant. The only thing that rates are doing, uh, ironically, we've finally come to this point that I was kind of thinking about well over a year ago now,
Yeah. Yeah,
where
we're here.
where where Fed fund rates are inflationary.
Yep. I told you it'd take a while, but we are here.
Yeah, we're here. Um, and so if you go back to thinking about if CPI is cool and if the Fed funds rate expectations drop and then maybe the Fed actually starts cutting rates, um, that that's actually going to hurt the economy, not help it. So because the economy is currently running fine and it's running on the back of deficit spending, and if you cut the deficit spending by cutting rates, you're going to be cutting the economic activity.
Yeah.
And so, yeah, we're kind of at a point where up is down and down is up, right? So right now everybody's animal spirits and they think, okay, well, once the Fed cuts, that means that duration risk is less of an issue and we can go wild again. But that has already happened. Like we've already discounted all duration risk.
Yeah.
And so the Fed cutting, there's no more, like you can't discount less than zero, right? I mean, there's no more to discount. They can't grow. I mean, I guess they could lever up more, right? They could hold they could lower their reserve fraction. Um, but they've got the Basel III endgame coming up. When does that go into effect? They keep pushing it and they're
Yeah,
fighting it,
yeah,
right?
they're just pushing it and fighting it. It should all be done by 2025, as far as like the depository requirements and everything are concerned. And
Yeah. So
everybody was supposed to have all of their shit for next year filed by, like, I think May, June. Gaff would be a better person to ask about this because he deals with it directly. But yeah, I mean, they should be setting up to meet those requirements now, and instead they're fighting back against ever meeting those requirements.
Yeah, it's kind of interesting, but that to me is the biggest risk that banks care about right now, because it's sort of a foregone conclusion that the Fed is going to support any weakness in the economy in whatever way to the
Yeah,
extent that they can. And so they've discounted all treasury rate risk. Um, so the only other risk then is putting a cap on how much they can lever their deposits, which is Basel III.
yeah.
But that being said, I mean everybody's already levered up. Households are max in. Um, I'm trying to think of what might happen when rates come being cut. Right? I mean,
Well, here's the way. I mean, I can tell you the way I look at that, at least, on the back of rising inflation, right? Is if you cut rates, you're going to well, first of all, you're going to increase supply, right? There's going to be more demand for treasuries, and then you're gonna be in a situation where rising right not only will inflation rise faster, but any hint of rising inflation after a rate cut is going to push ratings agencies to downgrade US debt, because like they will haircut us, right?
yeah.
That's
Oh, for
that's
sure.
yeah. I mean, instead of the DTCC trying to get ahead of it, you're just gonna get or FINRA or whoever. You're just gonna get your haircut from directly from the ratings agencies, because it's an unsustainable position, right? The only thing that's keeping them from downgrading us at this point, I'm convinced, is the fact that we're promising, this 5% for in perpetuity, essentially.
Yeah, and I think, but just everywhere I look, everybody's already all in. They're all in
Yeah.
equities. They're all in real estate. How much more all in can you get? And I know we've been asking that question all the way from like 4,700 up to 5,250.
Oh yeah.
Um,
Yeah.
but I think the last time we hit 52, 60 something,
Yep.
and then plummeted, and we're showing signs that sold put leverage is topping out.
It's higher. It's
I,
fucking higher than it was when we were at our peak.
Yeah, but we're kind of getting to this plateau, right? It was going up. I mean, it was going up in a straight line last like May to August,
Sure. Yeah.
um, and and then it faltered a little bit, but then it like perked up right, perked right up, and then sold calls got squeezed out, but those are all squeezed out, and so it's really just a matter of how much farther can sold puts really take us. I mean, if people really want to try to like jump into spot calls, right? I mean, that might juice things a couple
With
percent for a
with
little
what
while.
with what money?
I don't know, but let's say that someone finds something after the Fed cuts rates or promises to cut rates or whatever. Like people just get as bullish as they could possibly get. I mean, what does that get us? Like maybe another 2% on the index, and then what, right? Then it's like, okay, we need to get our treasuries before the rates drop more, as people, because we want to lock in those rates, which means the money's got to come out of the stock market. People who want to buy houses, who've been waiting, who've been watching their stock investments go up, and they're just frothing at the mouth, like I can't wait for rates to come down so I can sell all this Nvidia and go buy a home, right? Um, I think that those things are going to start happening, and then on the back of all of that, right? I don't see. I'm going to stand on this hill. I'm going to die on this hill. I don't see that much more upside on stocks. I see so much more downside than upside long term.
Yeah. Yeah.
Um,
I agree with that.
and I'm not really interested in investing more than I have, very small amount now, in stocks, just because they're so expensive. I might actually just take everything off the table. But that being said, um, however, I do also see inflation is going to be persistent, and I do think we're going to end up in stagflation,
It just sounds
especially
like you're
because
saying you should be going long commodities, but you don't know how.
yes, I have considered buying gold. I was like gold was like right around 2300. I think
I
it
meant
might have
real
dipped a little bit
commodities,
below.
not pretend ones.
Well, people actually use gold. I agree. That's not what most people are buying it for, but it is an actual commodity. It's just also a shiny rock. Um,
Yeah,
and
as
like
a
Bitcoin.
commodity, it's vastly overpriced. As a precious metal, it's probably more fairly priced.
Yeah.
But
I think honestly, like probably if I had to buy anything, I'd buy energy.
yeah, energy, copper, steel, coal, the drivers of industry are usually really good if you think you're heading into stagflation. But I mean, we can and to do say welcome to Long Johnson, man. I appreciate the support. To answer your question and kind of get into a conversation about why the index has failed a few weeks ago and what has changed and what has persisted. I think we should probably discuss that. A few weeks ago, when indexes began to fall and we got that 5% correction in the spike in volatility, we were seeing leverageable assets, or same as cash assets, um, tighten pretty significantly. We saw yields spike, we saw vol spike, we saw dollar rise, right? All of these things, they widen the credit spreads. They make it harder to leverage up all of those assets, and for funds and for even individual investors, because the value of your same as cash assets is declining, right? And so the available leverage on those declines as well. And leverage on the SPX at the time was extremely high. And so as that trims back, those positions have to pull back, indexes fall, volatility goes up because they start to leverage the inverse reaction, right? Which is to go long volatility versus short volatility, in order to protect your same as cash assets as they decline. um, and we really reached like a break point there, as break even inflation expectations continued to rise for 4 consecutive months into April. We got to a point where there was really no denying that inflation was clearly moving up, right? This wasn't just a one off. It wasn't just a quarterly thing. It was a
Although there are still
consistent.
plenty of deniers out there.
Oh, I know, but we are in a period of seeing consistent, durable rises in inflation, and especially in the stickiest parts of inflation: housing x energy x food, right? And durables and housing x food and energy, and we're seeing that stick, and we've not been able to get rid of that at all, ever, right? And so now it's going up, and we've made no dent in reducing it over the last 3 years. And so this is a persistent and very hard to address issue. And now, we've recovered largely, and volatility has been driven back down, except this time around the bond market's not in agreement. Yields are not falling at a pace relative to volatility falling. So people are saying, you know, the risk on these bonds is still mispriced due to the break even inflation expectations over 1 year, over 2 years, over 3 years. We're consistently seeing higher and higher inflation expectations come in. Meanwhile, everyone's going short volatility, and the hedge to those inflation expectations rising is long vol, right? And so we have a big disagreement there between the equity market and the bond market, and also a big disagreement between the Fed and the bond market. The bond market largely over the last 3 years has fallen in line with the Fed, or superseded even the Fed's best expectations, right? So that's something we saw in November, as bonds basically squeezed, um, and bond values skyrocketed, on the expectation that the Fed would cut rates going into the maturity wall that's begins this quarter, and it's huge. It's a huge maturity wall. So far, the Fed hasn't cut anything. They've been unable to cut. They're still unable to cut. And that is driving a larger disagreement between how we're valuing US Treasuries versus the Fed's statements. And so the Fed is trying to ease the pressure on those treasuries because they represent a significant amount of risk to our banking system, who is, largely exposed to treasuries that do not have yields nearly as high as the current spot. And they have those assets, and losing the value on those assets is going to reduce the available leverage those banks have. And this is what caused a lot of bank failures back in March. If it persists and US Treasury yields continue to rise, it will cause further bank failures into the future. And so, with this last Fed meeting, we got a little pushback from the Fed against, what has largely been tightening financial conditions. And they're like, no, we still think we're going to cut. We still see some positives, right? But the bond market this time around is saying, we don't agree with you. We don't think you can cut. We don't believe you. And the bond market is continuing to price in forward Fed cuts at around one cut for this year. And that's tentatively based on whatever our inflation print is this coming week. And so, we're really in like a position where there's not a lot more leverage available. The leverage that is available could quickly decline. And all of this is based on the Fed not keeping a consistent narrative surrounding inflation and not aggressively tackling inflation, and allowing the Treasury to kind of just run rampant with their issuance. And everything's been put into this position where if financial conditions tighten, and I said this at the beginning of the year, but we're in a cycle where financial conditions will tighten, vol will go up rapidly, equity prices will fall. And then, as that happens, the wealth effect drops down a little bit. People stop spending as much. They get a little scared. Inflation softens. Financial conditions ease again, right? And then we see the top side. And this is probably going to go back and forth until the Fed makes some kind of actual decision that has an impact, either whether that be cut rates and let the U.S. deal with a downgrade, or raise rates substantially in order to shock the markets.
Couple of things, couple of snarky comments.
Yeah, got it.
First one, this sounds like something I've heard before.
Mm.
Arthur Burns.
Yeah. I think he had his Burns moment when he said, "What stag, what flation."
Yeah, I don't
Yeah.
see the stag or the flation, quite
Dipshit.
frankly. Yeah, seriously. So yeah, we've seen this before, which makes it even worse because he's determined to be the not Arthur Burns, but he's becoming it. The other one is, they say that you can't fight the Fed, but there is one person who can fight the Fed: Congress.
Yeah.
Because I mean, this is what's so enraging, right? Is that if the Fed was actually independent and was only looking to secure the money supply and monetary stability in general, they would look at they would be hostile to fiscal, right? Or they would be hostile to Congress. They wouldn't try to be neutral. They wouldn't try to pretend like it's outside of their scope and there's nothing that they just right. I mean, to be a neutral or sorry, to be an independent entity means that they cannot be neutral to that effect.
Yeah, I agree.
And the fact that they're pretending like independent is equal to neutral is something that enrages me, because if it was me in charge of it, I would be saying, you're spending too much money, you're making the economy too hot, and you are making inflation too hot, right? And so I'm going to make it too painful for you to spend this money so that you stop, which would be, I'm going to raise rates until you stop spending so much money. And if you refuse to do that, what will end up happening is you will be spending so much money on servicing the debt instead of productive spending the economy, that the populace will turn against you and vote you out. But instead, we get, oh, I'm good. They're tiptoeing around it, and if nothing out, in reality, they're actually accommodating it, right? And that's the infuriating thing too, is that everybody is accommodating this big problem, and nobody's standing up to it. And the accommodation of this problem just makes the problem bigger. So when we actually have to deal with it, it's going to become so much more painful, and it drives me insane. Anyway, I had to get that out. The Fed should be adversarial to Congress right now and to Yellen. But anyway, yeah, I mean, back to what you were saying about the bond market, in terms of not believing the Fed, I agree. I think that's starting to happen. I mean, if the federal government's going to essentially increase the money supply by 7% a year, then the 10-year has to be 6 to 7%, right?
Yeah, I agree.
And the only reason it's not, I think the only reason it's not is because all of the big players who have the most levers to pull in that market would blow up if it was true. But if they weren't going to blow up, if that were true, it would already be true today.
Yep. Yeah. Yeah, if the rates push, and the Fed, but the Fed is now in a position where their narrative is no longer directing the bond market. And that's been really obvious over the last month, right? Is that the bond market's no longer in agreement with the Fed's narrative.
Yeah.
And as soon as they fail to control the bond market and the bond market starts to price up, the bond market's not going to be considerate of the bank's maturity restrictions, right? They don't give a shit about their mark to market assets. If anything, the bond market would prefer for all the banks to fail, right? And so how it's going to be really hard for the Fed to fight back against that, unless they're willing to substantially raise rates and protect us from a downgrade.
Yeah. Well, here's the other interesting aspect of all this that we haven't really talked about at all.
Mm.
Signs of economic woes are starting to be. Ooh, my son just bumped his head. He might start screaming.
Oh no.
Signs of economic woes are starting to become pretty noticeable in certain parts of the economy. Now, of course, this is definitely a K-shaped economy where the very well off are doing extra super well off, and
Yeah.
those at the bottom are doing extra super shitty. And I think what will end up happening is that we will be our raging euphoria up here at the top will be rug pulled by the poor who just run out of rope.
Yeah.
And I think that that's starting to happen at a somewhat, to me at least, alarming rate.
I think you're right. Yeah, it's definitely happening exponentially faster.
Yeah, things are going like certain parts. So even though housing in aggregate is still rising and rising way too fast,
Mm-hmm.
there are certain parts of the housing, uh, the housing market that are already in the beginnings of a collapse.
Are we talking about
Which is,
multifamily?
I don't remember which
It's
categories it was, but
it's
I'm thinking
it's
more
multifamily.
geographically. Okay, so like like Florida, um, Arizona, and I think California. I don't remember the third one, but there's three states where generally these types of things happen. Where I mean, rent like short-term rentals are starting to get eviscerated in some places of the country.
Mm-hmm.
And yeah, there's supply is starting to grow somewhat dramatically in certain areas. That is quite startling how quickly the supply is growing. But if you look at the numbers in aggregate, right? I mean, housing in aggregate still going up like 7 to 9% a year. And people expect it to continue to go up. And you kind of have to ask yourself, like, how can both of these things be true at the same time? Well, the spread's really wide, right? There's
Mm-hmm.
some areas that are still super hot where money is congregating in some areas where it's super low. And this isn't unexpected when you are largely supported by government spending, because the government is kind of like by unless they just send checks to everyone like they did before. I mean, the government basically is so large that they're just picking winners and
Oh,
losers. I mean, that's
Biden
just a
just
natural.
proposed that.
Well, hopefully that
If you
doesn't
buy a
go through
house, he'll
in the
give you
meantime.
$400 a month
I
for the
just,
next 2 years.
I want to know. I want to be in.
I
I
want to know
wish I
what the
was in the
fuck four hundred
room.
dollars pays for.
No, yeah. Number one. Number two. How does giving people money and driving up aggregate demand solve a supply issue? I don't understand that.
More. So I wrote a little bit about this on Twitter last week. If you think of houses as a store of inflation, the same way that you look at like a carbon sink, right? Then the more houses people own, the more inflation can be stuffed away in them, and then somebody else can buy it later, right? And if you look at housing prices since like the 1960s, the vast majority of the value in homes is inflation, right? That's what's been packed. So
Sure.
it's
Yeah.
just another, and that's the wealth advantage that a homeowner gets, is that they have something that absorbs the
An
majority of
inflation
the
hedge.
inflation.
Yeah.
Yeah, the majority of the inflation they experience throughout the period that they own that home. And then one day, hopefully, you're gonna find some other fucking idiot who's like, I want to buy your 30 years of inflation off of you so that I can then store my inflation for the next 30 years, right?
Yeah.
At a premium. I'm going to buy your inflation off of you at a premium, and boom, there you just made your investment on your house, right? Like that's where most of the money in home values comes from. Now, that's great until you experience either a period of deflation or a period of declining equity values, right? And then all of a sudden, the value of all of those investments and all of those assets, which have then been added into other, assets like MBS, right, start to decline, and then the value of the MBS, the MBS market starts to decline, and then you have like this massive fallout from falling asset values that were already massively overpriced to begin with.
Yeah. This sounds like a pyramid scheme.
It is. It's
Mm.
like, yeah, it is a pyramid scheme.
Yeah, I know. I'm just
Oh,
being
okay. The American dream is a
cheeky.
pyramid scheme.
Yeah. Well, what's really interesting is that I don't know. I'm sure people have strong opinions either way about Scott Galloway, the guy from was it NYU?
What did he do? What did
He's
he
just a
do?
professor that he's been talking. He gets on like political podcasts and stuff like that, and talks about socioeconomics and things like that. And he's been going on about the transfer of wealth from the young to the old that's been occurring for forever. But anyway, I kind of agree with him
Oh, I think I
that
saw his TED talk.
yeah,
Maybe
he had a
that's
little
been
TED
yeah,
talk. Yeah,
it's been making its rounds. How the boomers are fucking us.
yeah, which
Yeah,
that's an easy narrative to sell on the internet.
it's not hard. Yeah.
But yeah, I don't think that they're necessarily doing it on purpose. I think they're just continuing a longer term trend that's starting to crack.
Well, they've stored more inflation,
Yeah.
right? They've got all the inflation stored up in their assets, and then we can't afford to buy those assets because our inflation is too high.
Yeah. I think the only way out of this is just to inflate even more.
Well, yeah, well, either that well, I proposed a solution. The government just subsidize massive home building far more than the market can bear and destroy real estate equity values.
We already have plenty of homes. That's the problem.
Once we can get real estate prices down to the point where there's no longer a premium on the inflation that you're buying, right? You can just buy the inflation at cost. Boom, problem solved. Then
Yeah.
inflation goes away,
No.
wealth transfers smoothly to the next generation, and we don't have to spend as much money. The government can stop spending money. Not to mention, they can finance all of that building at 7%. They'll pay off the entirety of the national debt over the next 30 years.
Yeah, maybe. I
We
mean,
just need to bring
they need to
back
let the
Fannie Mae
bubble
and
pop.
Freddie Mac and do it right.
They need to just let the bubble pop. We need to sweep out all the imbalance and just build a fresh, new, strong foundation on top of the rubble. That's my feeling anyway. I just don't think that we can financially engineer our way out of the situation that we're in. I mean, sure, we can continue to delay it, but it's already starting to become quite a problem, and it's already causing issues politically for those who are in power.
Yeah.
And also, it's very clear that nobody in Congress would want to do your plan, right? They're trying to do exactly the opposite.
It's not anarchy. How's that anarchy? It's a simple solution to solving our housing crisis, national debt, and inflation all in one go. Why wouldn't the sensible nonpartisan members of our government not agree to such an eloquent solution?
I mean, I agree that it's definitely housing inequities are definitely the two problems. That the value of those things are the two problems that we're largely dealing with right now. But I think all the at this point, all the Fed has to do is just nothing. If they just do nothing for long enough, I think that if there are enough cracks as inflation stays too hot, I think the housing market might collapse anyway.
Yeah, it probably will, but they could push it along a little faster instead of dragging this shit out for 15 years,
Yeah,
right?
yeah.
The pickle and the cat are making too much sense again. It's easier to start a war. It is. It is in fact easier to start a war. You're not wrong, and that's usually our go-to. I
We're
looked at
already wartime spending, right? That's the thing.
yeah, yeah, we are. We're spending like it's World War II all over again.
Yeah,
Except we're not
and
bailing Europe out this time.
we are fighting two proxy wars right now, right?
Well, yeah, but
They're
they're not
little baby
they're not
ones.
they're not big enough. We need something bigger.
Yeah. Well, we're working on it. We gotta let it cook.
Yeah, yeah. We've ignited the fuse, but we haven't blown up the firecracker yet. I looked at Zom balance sheet, couldn't see interest rates or maturity on debt. How do I find that? Is that a counter argument to commodity investment during stagflation? Well, first of all, that's energy, which is kind of separate from base commodities, and far more geopolitically influenced. Also, Zom's balance sheet probably has little to do with the value of commodity investments. But if you want to look up their bonds, and their current corporate debt, which probably is terrible because they're a major oil producer and they spend money all the time, I would suggest looking at FINRA's fixed income data, or maybe the BIS has some debt securities. Well, that's going to be broader. Bond savvy. If you have access to a Bloomberg terminal, maybe through your alma mater or a local library, that would be the best way to research corporate debt. Um, Not everybody has access to that, so FINRA may be an answer. You might have to email them to get permissions, or you might have to pay for that data. It's definitely obfuscated from the general public. But you could dig into that. And yes, there is an argument that rates continuing to rise would be a negative for maybe a company like Zom. But Zom has plenty of competitors in the oil industry that could benefit from their failure, right? So remember that these markets aren't just static, and even even the leaders of each individual sector can fail, right? And there's plenty of competitors waiting eagerly to take over their market share, who are maybe better positioned or have better balance sheets, to manage this period of time. Democracy won't manage itself. Anyway, do we want to talk about expectations for this week? I won, but I'm not going to rub it in anyone's face because I was off by like $30 the entirety of the week. Um,
Yeah, I thought the move. I thought they were gonna poop out sooner, but they found a little bit more gas, and we just kind of drifted up all week and did nothing.
I mean, you also did project that we would drift. We can just ignore dorks because it was garbage. Um, but you did also project that we would just go slightly up all week. We just happened to go slightly up all week, slightly higher than either one of us anticipated. And a large part of that was like the two gap ups in the early part of the week.
Yeah, yeah.
Um, Dork was spot on until Wednesday, where he then said we were gonna just crash.
He's
So
ready.
yeah,
He's got his home. He feels all he feels ready for like the next nuclear wasteland.
he's just ready for rates to go to 12%, and then he can brag about his 5% home mortgage.
Yeah. Now he's close. He's probably at like seven, isn't he? Six something or seven.
I think he's no, I think he got it at like 5.8 or something like that. He's pretty low.
How?
Yeah, good credit, I'd imagine, or a better down.
Maybe.
You could still trim some points. It's not easy. But I know people who've recently gotten financed at like 4.5, 4.7.
Financial
You
conditions are super tight.
yeah, sure. Well, I mean, it depends on who you're going with, right? And like whoever the
Yeah.
lender is, and then you can also, put more down to trim your rate. And you can do a few other things. The condition of the home plays a pretty big factor. Um like
I'm assuming the dork bought a shithole though.
local values. I think he bought like a kind of like a nice slightly above starter home. Like 3 bed, two
Yeah.
bath, something like that.
Yeah, that'd be good.
4.5%, is that half up front? You're probably paying like 20 to 30% down to get that rate.
I know Dork had a bag and he dropped on it. So anyway, yeah, this week, uh, let's see. I'll try to give a real prediction here, since I know I'm annoying and I always give half-assed ones.
We're
Let's
gonna have to give a
see.
real one because Dork isn't here, so it's just me and you.
Yeah, let me pull up a couple things. Let me do this right. It's like me completely wrong anyway. Uh, okay. So Monday, we're going to open gapped up to 42.35, or sorry, 52.35. That's where we'll open.
Okay.
We will close at new all-time high 52.70.
All right.
Then Tuesday, we will open at the same spot, but I'll say we'll open at the same spot just to make it easy on you.
All right.
But we will go down at the beginning of the day to 52.40,
All right.
and then we'll close the day at 52.90.
Jesus. I hope so. The swings are insane.
Then on Wednesday, we will close the day on Wednesday at 51.90.
All right.
And then let's just draw a line to end of day Friday at 51.49.
hold on. Let me make sure I got these all lined up right. So Monday close, Tuesday midday, Wednesday close, Wednesday close, and then Friday close. Okay. So I make this white. This isn't yours isn't bad. I'll give you that. You're pretty close to where my thoughts are. I want to be a little bit off from you, but I agree we gap up tomorrow. I would say I'm gonna say 52.60. I don't think we get the all-time high back. Then I think a small drop back to 50 Wednesday, move up to the all-time high end of day Wednesday. Yeah, and then yeah, I'm kind of on board with the down into
It's
the end
good,
of the
right?
week.
It's good.
Yeah,
It's
it
good,
is. Yeah, I like it.
right?
I'll I guess I'll just I don't know. Maybe I could be more extreme than you. Hold on,
We
let
could
me
just
see.
call it. We could just call it our prediction.
Oh, I need shit, bastard. Hold on, I fucked it up. We could, yeah. I'm I'm pretty much in agreement. I just think that I think we don't get the all-time high till after Wednesday. Actually, you know what? I don't agree with the all-time high. I think we fall back to 25 after PPI and stagnate, then we fall off. And I think we fall off more than you're projecting.
I can see that.
I think PPI will be maybe even more rough than CPI.
You think so?
Yeah, producer costs. I mean, like I know they're really efficient in passing them forward, but I think they're rising faster based on services than consumer costs right now. Like I think that'll catch up into summer and like that peak will move over to CPI. But I think right now the producer costs are going to weigh a little more heavily, and also the market tends to react more negatively to PPI than CPI, right? Like hot CPI comes with like more revenues, whereas hot PPI comes with reduced margins. So
Or
yeah,
about your hot EPI.
ooh, I'm sure Dork would have just projected straight down for Monday, so I'll assume that that's what.
Yeah, give him one of those.
Give him one of those. I'll wait for him. I'll wait for him to shoot me one, and then I'll post it in the channel. But I think a 3% drawdown from here is pretty reasonable. Maybe even more.
Yeah, I mean, we should be having like a 20% drawdown, and then another one, and then maybe one more.
We just need
But
a
I can't predict those because then I
like a
just
full
look like
fifty
an idiot.
percent, then a 10% bounce, and then another 50%. And then we're
Yeah,
good. We're good for the next 15 years.
exactly. Just get it all over with.
Yeah.
Rip the band-aid off.
Kirk doesn't
There's
do
so much
shared glory.
there's so much pent up financial anxiety over just everything just not getting wiped out. We just
Yeah.
need to wipe everything out so everyone can like
By the
just
bottom.
release.
Yeah, all I want to do is
The Fed,
buy the dip.
the Fed has been financially gooning us for years.
Oh my god.
The Fed is the ultimate goon.
Has JPOW been mewing?
I don't know. I'm gonna have to go learn what that one is. I just learned what gooning was like 2 weeks ago.
It's okay. You'll catch up on Zoomer Talk soon enough.
I've been trying to throw that into more everyday conversations with strangers and random people. So I figured
G-
I'd throw that in here.
yeah, no, it's perfect. That's how you should use them. Then that way you not only have you learned the word, you've adopted it.
Yeah, I mean, I
Yeah.
can't think of a more polite way to talk about sexually edging yourself to release.
in public
Exactly.
than just the word gooning. It serves a purpose in society
It does.
linguistically.
Yeah, no, it's true. We have been getting gooned by the Fed.
Yeah. All right. Well,
Oh, I think we're good. Yeah. What?
speaking of gooning, should I give everybody who had the mental fortitude to sit through this long discussion, should I give an update on our sex chair?
Oh, are you talking about our secret project or the actual sex chair?
The actual sex chair.
Oh yeah, absolutely.
So it has become our two younger children have come into a phase of sleeping in bed with us lately. So the sex chair has become the place where our youngest child puts all of his Hot Wheel cars before bedtime.
Oh
So
no.
that's their garage at nighttime.
I told you what was going to
Um,
happen.
the last time we used it was yesterday morning. But before anybody gets too gooned here, we used it to barricade the door so that we could try to have enough time to fool around. But our youngest caught on that we weren't around and started violently banging on the door and screaming, trying to come in. It was like a scene from The Shining. Then he ran away and we heard him grab some keys and run back over so he could unlock the door. At which point, the only thing left was the sex chair barricade, which has good grip, I will say. It grips very well to carpet.
It's
It
got
doesn't
like
slide.
rubber feet.
It's got like a rubber bottom that kind of does a good job of gripping a carpet. So
So
he
long
he actually
3M.
he actually couldn't break through the sex chair barricade. It was successful, but nothing kills a boner faster than a 4-year-old violently trying to enter the room to see what you're doing. So
Once
we
upon a
give up.
time, our ancestors in this country lived in cabins with like 9 children and 1 room. And I'm gonna just assume that they told them, look the other fucking way. Because they kept having kids in that house with 9 children.
I'm about to bend your mother over the wash table.
And the only way I can think of that being possible, go outside and chop wood. Maybe. Maybe that's how it went down.
Yeah, they sent them outside.
But
Nowadays, yeah.
how did they manage? No one knows. I mean, I just assume that they just did it right there in front of everyone.
Maybe they went out in the woods.
Maybe you just send the kids away. Like go milk the cows or
No.
something.
You and the wife just like wander out in the woods and hide and go to town.
Oh, okay. Maybe. Interesting. Under the covers plus no care for women's pleasure. We don't know that that was universally true. That might not have been ubiquitous. There were guides written in the medieval times about how to pleasure women. I'm sure men like to brag to each other just as much as they do now back then about how great they were in bed.
Yeah, nobody. I mean, I don't know. Only psychopaths don't care at all.
Yeah, right? Like who's having fun when the other person's just a dead fish?
Yeah, it's kind of just
That's
like
that can't be
it's a
something
little
that's
it's a
just
little
modern.
rapey.
Yeah.
Yeah. Yeah. No.
Results may vary. My hubby said that's when earmuffs were invented. The Kama Sutra has been around since 300 BC. Yeah. Flick it, fucking finding the man on the boat, older than Jesus.
All right. Well.
Yep, that's a
Well.
great note to end this on, I think.
Now that everybody has now been fully gooned financially and otherwise.
I think we can move on with the rest of our days. Happy Mother's Day to your wife, man. Thanks for taking the time to be on here during this most important of holidays where you get to watch all the kids by yourself.
Yeah, no,
Um,
no. I told her to go in her room and lock the door and barricade it.
that's
So
that's
that's
the
what she's
that's the
doing.
real gift.
I don't think I could even get in there right now. That sex chair's got heft. It's got a hold. yeah. Anyway,
You need one of those those partition doors where only the top part opens, like they have in farms.
yeah, but my kids would figure out a way to open it.
You put the door handle like 8 feet up in the air.
They'd get to it. Have you
Dutch
seen
door.
kids?
No, no. I mean, I know what I did as a child, and I definitely would have gotten in whatever room I wanted to.
I'll put stuff up. I'll put stuff up over the fridge, like way on the top shelf in the cabinet over the fridge, and these little assholes are like balancing chairs on top of other chairs and like trying to lever their way up. They'll do anything.
They're creative. That's a good thing, right?
Yep.
It means your kids aren't stupid.
Yeah, and they're enterprising. Yeah, they're.
I've seen other kids that just sit there and drool. Like that's most of their
It's
day.
actually
So
exhausting because my kids are really stubborn and they never give an inch. But that's also, I guess, part of the deal with kids who are mentally very just active.
yeah,
But also, like, there's a product online that if every kid was like my kids wouldn't exist. We bought a lockbox that has like a combination lock on it, but it only has 3 numbers. So what do my kids do? They try every number,
every combination
from 000 to 999, and there's just not enough numbers. We need more numbers on the combination lock. But yeah, I'm sure most kids are just like, I'll never know. I just will never be able to figure it out. But it only takes like 20 minutes to sit there and try every number.
You just roll it and then pull on the lock and see if it opens. All right.
Put it in. Yeah. Anyway, all right. Yeah.
Enjoy the rest of your day, man, guys. Thank you for coming on. I appreciate it. I'll see you later, man.
See ya.
Guys, thank you so much for tuning in. Happy Mother's Day to all of you, and your significant others and or your mothers, whatever. Enjoy the rest of your weekend. I'll have Pickles Picks out tonight, and I will be up bright and early tomorrow morning to see you all for market open. Later, everybody. See ya.